So following up on that, another question is about the coronavirus situation, which you haven't really talked about that much. How do you see that affecting the portfolio overall? Are any holdings disproportionately affected by the virus, by the lockdowns? And the questioner is asking maybe perhaps the offshore positions in particular.
Yeah, okay, so that's excellent questions. So I run the risk here of sounding too optimistic, but I am, I think, very rationally optimistic about the outcome. But I also tend to have a long-term mindset. I think we are right now in the most incredible opportunity of maybe this generation to be buying and putting money to work in the markets. This is the opportunity, as I tried to explain with those slides. And I was just, look, I'll just throw out a few data points. And I know that a lot of this is going to sound very controversial. But look, the other day, some of you will be familiar with Nate Silver, the statistician. He runs 538.com, and Fauci was on 538.com giving this whole explanation on, what how he expects things to proceed. And he's basically talking about how the number of vaccines that are in their final stages of testing, and that he's also very optimistic that we're going to find a cure, and what, maybe it'll have 70% efficacy and only 70% of the population will be willing to accept the vaccine, but that will be enough. And he also went on to explain that there are, several businesses that we are becoming more familiar with in the last few days that are going to start producing these vaccines prior to FDA approval. So, we're basically expecting, and he expects one or multiple vaccines before year end. And he expects prior to FDA approval, we will have tens of millions of vaccines available. And that will, of course, they'll first be available for the people on the front lines. And, however that's rolled out will be a discussion. But ultimately, I think people are very social creatures, and they want to get back to some form of normalcy. I mean, most of us are probably in some form of self-quarantine at the moment, and people want to get out. I see people, when we try, the nation, a lot of states try to open early, and what you saw is people crowding at beaches and going out to restaurants and getting together with their friends. And of course, that caused a problem. But the point is, people really, we're social creatures. We want to be out. So once you get a vaccine and some of these things get under control, I think we'll start to get to a new normal pretty quickly. Further, I see, this is so different. So I've been investing now for over 2 decades professionally, and this is like the 3rd major crisis that I've been through. There's a lot of similarities, but there's also some differences. And one of them is the government response. And I know nobody has a crystal ball, so you have to use probabilistic thinking when you're considering any of this. But one of the strong possibilities is that, let's just look comparatively from the financial crisis, 2009. In 2009, the unprecedented bailout, okay, I was consulting for Goldman in Wall Street and London doing risk management work, and there was this announcement, the unprecedented bailout. And you probably remember it was like Hank Paulson was like on his knees begging Bush, and they issued $700 billion. And that money went mostly to bank reserves. What they did this time is they issued $8 trillion. So this is like such a different dynamic. And they did it differently as well. Instead of putting into bank reserves, it mostly went into cash, into like consumer pockets. So they did the PPP loans, and then they did the bailout, of course, and they did the stimulus package, and they increased all the unemployment benefits. And so that's why you have these money markets sitting at banks with $5 trillion earning zero. So if we get to a point where there's a vaccine, which I sort of anticipate, maybe I don't want to put a time frame on it, but vaccines are going to be available and FDA approved by the end of this year, and then maybe they roll out in the 100 millions next quarter, which is what Fauci was explaining, or not next quarter, sorry, for Q1 2021. Well, now you've got 5 trillion sitting in money markets. So where's that going to go? That's either going to go into consumer purchases, or it's going to ultimately make its way into investments. And both of them, I think, will benefit the equity markets, surprisingly, because consumer purchases are going to, earnings have been hit so hard because nobody's spending, because nobody has anywhere to go. Now people go out and start pursuing their lives, and suddenly earnings start surprising to the upside. Now, when you get all these earnings surprises to the upside, that drives the equity markets up. And there starts to become this fear of missing out. So anybody sitting around with cash earning zero starts to wonder if maybe they should be putting their money to work. And so I think, look, the coronavirus certainly hit us. We have a basket of some financials, right? We have one OEM that got hit particularly hard, and and it will actually come back a little bit, but and the environment's certainly changed. We've all seen what's happened with the technology space. The positions overseas are very interesting. You've seen a number of, there's actually a stronger interest now for further diversification, and a lot of people are talking about strong dollar. A lot of the news and things that you'd see would talk about the value of having an emerging market sort of position. So as many of you know, we built Thales. We are an owner of Thales. And Thales is an exceptional position. We built this capital pipe that goes into Turkey, and we built a basket of securities out in Turkey. It's 5 or 6% of the portfolio. We call it one position, but it's really 13 holdings. And they're just incredible. It's like Coca-Cola bottling company of the Middle East selling for 6 times earnings when it sells for 22 times earnings everywhere else in the world. And is Coca-Cola in the Middle East particularly impacted by coronavirus? There's probably a little bit of decline in earnings because people aren't out at restaurants as much. But if you just can look out, I think by the end of 2021, and certainly by into 2022, people will look back at this period right now as with envy. They'll just say these prices were so incredible, and it will become so obvious that they were so incredible. And so you have to look through this uncertainty and just get comfortable with the fact that there will be volatility, but we own great companies. And so, I guess that's a lot of that was sort of a macro view, but I do think, and by the way, I will throw out, since I am talking macro views, which we have no crystal ball, and I have no ability to predict it any better than anybody else. There's something else that might happen. And I kind of think that the probability of this happening is growing. I think that it's growing. I've been talking about it for a while and it hasn't happened. So I've been wrong. I mean, if you're too early, you look wrong. So, but we've been missing inflation. And we've been missing inflation for so long that people have said, well, I guess we have the model wrong. I guess we don't get inflation when we print money. And I don't think that's the case. I think we have the model right. I think we get inflation when we print money. And so we just printed 8 trillion and mailed it out to everybody. Everyone talks like we're having deflation, and I think the surprise will be when we start getting a little bit of inflation. And I don't think it'll be hyperinflation, but I expect Powell in all of his statements, he'll hold his statements true. We have, high unemployment right now. It's still, I think it hit 20, but now it's probably at 10. And the focus from the Fed will be on the unemployment figures. So they will keep interest rates low despite a bit of inflation, and or we, I guess, could call it reflation. So even if it starts ticking up 3%, 4% above their 2% target, I bet they keep interest rates low, which means if you're sitting in your money market account, you're earning nothing and inflation's 4%. So, people think that cash is safe. Cash is trash. Cash will just be eroded and eroded and eroded. You lose purchasing power year after year, and people will start to recognize that, and they'll realize they have to put their money to work somewhere. And what are their options? Bond market is interest rates are zero. Corporate bonds, you get a little, risk premium. So you're making 2 or 3% in a some bond portfolio, which also has a lot of risk because as rates do go up, that comes down, or you have the equity market. And so I think there's a lot of cash sitting around, it's a very fearful time. Corona is a very big problem. Clearly, one death is too many. It's a terrible environment, but we will get through this. I mean, we've gotten through wars and we've been through pandemics before. So we will get through this. And from the other side, we'll look back at this and recognize the opportunity that we're in right now.